Imagine you're standing at the crossroads of your financial future, with one path leading to the land of debt, where high interest rates and monthly payments loom, and the other path leading to the kingdom of investment, where the possibility of high returns and wealth building awaits. Which path will you choose? That's the question we'll be answering in this video, as we dive deep into the intricacies of debt and investment, and arm you with the knowledge to make the best decision for your own financial situation. Number 1. Definition of debt. When it comes to debt, it's easy to feel like you're stuck in a never-ending cycle of bills and payments. It's like a dark cloud hanging over your head, always looming and reminding you of the money you owe. But what exactly is debt and how does it work? Debt, in layman's terms, can be defined as an obligation to repay a sum of money, goods, or services that one has borrowed. It's like a financial U, except instead of owing your buddy a favor, you're owing a lender money. And like any IU, there are terms and conditions that come with it, such as interest rates, repayment schedules, and penalties for non-payment. Common types of debt include credit card debt, student loans, mortgages, personal loans, and even car loans. Each of these types of debt come with their own unique set of terms and conditions, and it's important to understand them before taking on any debt. But as much as debt can be a necessary evil at times, it can also be a slippery slope. The more debt you take on, the more difficult it becomes to keep up with the payments. And soon you may find yourself drowning in a sea of high interest rates and missed payments. It's important to remember that debt is not necessarily a bad thing, as long as it is managed responsibly and used to make investments that will benefit you in the long run. But it's important to be aware of the potential negative effects of too much debt and to always strive for a balance between debt and investment. Number 2. Definition of investment. Investment, on the other hand, is like a beacon of hope in the dark financial sea of debt. It's a way to put your money to work for you rather than you working for your money. Investment is like planting a seed. You put in a little now and wait for it to grow, with the hope of a bountiful harvest in the future. It's a way to put your money to work, earning you returns that can grow your wealth and financial security. Common types of investment include stocks, bonds, mutual funds, real estate, and even precious metals. Each of these types of investments come with their own set of risks and potential returns, and it's important to understand them before making any investment decision. Investing can be a great way to build wealth over time and achieve your financial goals, whether it's saving for retirement or buying your dream home. But like any good harvest, it requires patience, research, and a bit of risk taking. It's important to remember that investments can be a powerful tool, but it's equally important to be aware of the potential risks and to always strive for a balance between investing for the future and managing debt in the present. Number 3. The showdown. It's time for the main event, the ultimate showdown between debt and investment. Like two heavyweight fighters entering the ring, both debt and investment come with their own set of strengths and weaknesses. On one hand, debt can be a powerful tool to help you achieve your financial goals, whether it's buying a house or starting a business. But like any powerful tool, it must be used responsibly. Otherwise, it can quickly spiral out of control and leave you drowning interest and missed payments. On the other hand, investment can be a great way to build wealth and achieve financial security, but it also comes with its own set of risks. Investing can be a bit like playing the stock market. You never know when the next bear market will come, and you have to be prepared to weather the storm. So, what's the verdict? Who wins the ultimate showdown? The answer is, it depends. It depends on your own personal financial situation, goals, and risk tolerance. If you're someone who's just starting out on your financial journey, and you're not yet ready to take on the risks of investing, it might be best to focus on paying off any high-interest debt you have and saving for emergencies. But if you've already got a handle on your debt and you're ready to start building wealth, investing might be the way to go. The key takeaway here is that both debt and investment have their place in a well-rounded financial plan, and the key to success is finding the right balance between the two. It's a delicate dance, but with the right moves and the right mindset, you can achieve financial success and prosperity. Number 4. Understanding your current financial situation. Before you can make any decisions about debt and investment, it's important to understand your current financial situation. This is like taking a snapshot of your finances, a clear and honest look at where you stand. Think of it like a treasure map, with your current financial situation as the starting point, and your financial goals as the treasure. By understanding where you stand, you can plot the course to where you want to go. To get a clear picture of your current financial situation, start by taking stock of your assets and liabilities. Your assets include things like cash, investments, and property, while liabilities include things like credit card debt, loans, and mortgages. Next, take a look at your income and expenses. This will give you a good idea of your cash flow and whether you're living within your means or spending more than you earn. Once you have a clear picture of your current financial situation, you can start making decisions about debt and investment. If you find that you have a lot of high-interest debt, it might be best to focus on paying that off before you start investing. But if you have a handle on your debt and you're ready to start building wealth, investing might be the way to go. Number 5. Strategies for managing debt. We'll get to that in a second. I have a favor to ask of you. If you like this video so far, please subscribe to the channel. Managing debt can be a bit like taming a wild beast. It requires patience, discipline, and a clear plan of action. But with the right strategies, you can tame that beast and achieve financial freedom. One strategy for managing debt is to focus on paying off high-interest debt first. This is like going for the jugular. It's the most efficient way to reduce your debt quickly. Another strategy is to consolidate your debt. This is like rounding up all the little beasts and putting them in one big pan. Consolidating your debt can make it easier to manage and can also lower your overall interest rate. Creating a budget and sticking to it is also an important strategy. This is like building a fence around the beast. It's a way to keep your debt under control. Another strategy is to increase your income. This is like taming the beast with the promise of a bigger carrot. By increasing your income, you can put more money towards paying off your debt. Finally, it's important to remember that managing debt is not a one-time event. It's an ongoing process. It's like keeping the beast fed and exercised. You need to stay on top of it and make sure it doesn't get out of control. Number 6. Types of investment. Investing can be a bit like exploring a vast and mysterious jungle. There are many paths to choose from, and each one leads to a different destination. But with the right guide and some careful planning, you can navigate the jungle and find the treasure you're looking for. One of the most common types of investment is stocks. Investing in stocks is like panning for gold in a river. It can be risky, but with the right research, you can strike it rich. Another type of investment is bonds. Investing in bonds is like planting a seed in a garden. It may take longer to grow, but it's generally considered a safer option. Real estate is also a popular type of investment. Investing in real estate is like building a treehouse in the jungle. It can provide a stable and long-term return. Finally, investing in yourself is also an important type of investment. This is like sharpening your machete. By investing in your own education, skills, and professional development, you're preparing yourself for the journey ahead. Each type of investment has its own set of risks and rewards, and it's important to choose the right one for your financial goals and risk tolerance. Remember, investing is a long-term game, and with the right guide, you can navigate the jungle and find the treasure you're looking for. Number 7. Building a diversified portfolio. Building a diversified portfolio is like creating a beautiful mosaic. It's a combination of different pieces that come together to form a beautiful and balanced whole. A diversified portfolio is one that includes a variety of different types of investments, such as stocks, bonds, real estate, and cash. This is like having a variety of different colored tiles, each one representing a different type of investment. The goal of diversification is to spread your risk across different types of investments in order to minimize the impact of any one investment going bad. It's like spreading the risk across different colored tiles. If one tile falls out, the overall mosaic will still be beautiful. When building a diversified portfolio, it's also important to consider your personal investment goals and risk tolerance. This is like choosing the right shaped tiles, each one representing a different type of investment to fit your personal goals. It's also important to regularly review and rebalance your portfolio. This is like regularly checking the mosaic, making sure the balance and alignment are still correct, and making any necessary adjustments. Building a diversified portfolio takes time and effort. But with the right combination of different types of investments and a clear plan, you can create a beautiful and balanced mosaic that can withstand market volatility and help you reach your financial goals. In the ultimate showdown between debt and investment, both have their own unique set of challenges and rewards. But by understanding your current financial situation, managing your debt, and building a diversified portfolio, you can take control of your financial future and achieve financial freedom.